If you like our content, please subscribe and like to support our channel. If you're interested in becoming a premium member, we want to offer you 30% off. Simply click the 30% button you see on the screen and type YouTube, one word, in the coupon code box. Hello traders, Gary and Joseph Wagner here. It is 11:15 in Honolulu, 5:15 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 20th day of June, 2025, and this is the evening report for gold and silver, our weekend review. Gold futures continue its methodical climb to lower prices after having a strong sell-off on Monday to the tune of $48. Today, gold is down only $2 per ounce, currently fixed at $3,384.40, but considering the low it hit, $28 below current pricing at $33.56, gold recovered quite well on the day. On a weekly basis, gold did sustain a pretty strong sell-off, down $68.20, forming a simple two-day pattern called a dark cloud cover. Also, when we look at this weekly candlestick chart, we can see that this latest sell-off is the third top, creating a triple top beginning on April the 21st, then on May the 5th, as well as this week, the week of June 16th. One interesting facet of today's trading activity has to be seen through a short-term candlestick chart. This is a 30-minute standard candlestick chart. You can see that overseas on Thursday, moving into Friday morning as it traded overseas, gold did trade lower, just pre-market open in New York. In New York, gold would open at about $33.60 and over the next hour trade to $33.86 and then slowly meandering to the closing price. So, in terms of gold trading off of the $28 dip that occurred, that was made up within the first hour of New York trading. If we look at the US dollar and its fall from grace at the beginning of this year, moving from approximately 110 to just above 97, this week the dollar had some strength overall, which truly accounted for some of the forces pressuring gold prices lower. So, based on the recent activity this week, with the price decline that began after gold opened at $34.74, the highest opening price on record, and selling off by just over $60, we did see gold break through the 23.6% Fibonacci retracement just above $3,410. Of course, the data set begins on the 7th day of April at just below 3,000 to above 3,500. If gold continues to trade under pressure next week, the most logical point that gold would need to hold is the 38.6% Fibonacci retracement at about $3,330. The reason I believe that's a strong area is we do have a lot of historical data in here, as well as right here, in which this was an area of support till it broke, so that a break below this price point, we would have to dig deeper and look at the 50% retracement. Although I don't think it will trade that low, that comes in at $32.64. If gold recovers in terms of definitive resistance, it has to be between $34.50 and $34.74, and that is the closing price on Friday the 13th and the opening price this Monday.
Silver lost just under 90 cents today, a decline of 2.43%, which is greater than its percent decline on the week. Last time we spoke on silver, we mentioned two key support areas that silver should hold if the bullish case was to remain intact, which I firmly believe that it is. The first level of support, $35.50, which was precisely today's low, and the next major support level at $35. Now, $35.50 matches up with these tops here, but also with the low on last Thursday, or June the 12th. On both instances, silver recovered intraday and closed well off the lows, signaling that demand is still very high. I want to take a look back and show you our current Elliott wave count. I've just put up our primary count, and this is our cycle count, or our sub count beneath that. As you can see, we have possibly completed our sub count wave 5 and may start to enter our fourth wave. But this fourth wave should not be that deep at all, seeing as our second wave was incredibly deep, which means that the fourth wave is likely to be more of a shallow correction. I don't see this fourth wave, if we are in fact inside of it now, going any lower than at the bottom $34. And if that was the case, where could we see silver rise from there? Let's assume that we are in our fourth wave. A correction to around $35, which is very likely, would be around a 23.6% retracement. We could compare wave 3 to the wave 5 if our wave 4 does in fact terminate at $35. And a one-to-one relationship, which is a very common relationship of a third and a fifth wave, would take us just under the record high at $48.34. Elliott wave does not take into account time frames. However, I could see this happening in the next month to 2 months. Even if silver were to correct down to $34, a one-to-one relationship would still take it to $47.13, and an extended fifth wave would break the all-time record high. I see silver trading to anywhere from $47 upwards of $50 by the end of this primary cycle's fifth wave.
This has been Gary Wagner,
And Joseph Wagner,
wishing you as always good trading.
we'll talk to you on Monday for our next video report.
Bye-bye.